Well, here I am once again with our Chief Investment Strategist, Philip Petursson. Philip, thank you so much. Thanks for coming out to visit, and man, we've had some tremendous conversations. How's your ski day today?
Ski day was a great day, Rod, as always. I mean, the weather's perfect. Anytime you can be outside in nature, it's a fantastic day.
Yeah, I'm a little bit worn out myself. How about you?
I'm a little sore.
Yeah, exactly. It's funny how we talk about the parallels a lot about, investments and life. And I talk a lot about that with our clients too, just about, the comparisons. Today we were skiing a lot of what we would call Moguls, right? Which are bumps. And then how'd that go for you, by the way?
Well, I ate some snow, a little bit, but otherwise it was a good experience.
Yeah, you had a wonderful comparison when we were talking about the bump. And you compared it to investing. And we were riding the chairlift up. And you said, you know what? What a great analogy. I'm going to let you carry on with that.
Okay, so when we think about investing, it's all about risk management and accepting a certain amount of risk to get to your financial goals. And we think about it in terms of conservative versus an aggressive investor. And we would say it relates to, say, a green hill versus a double black diamond. Both will get you to the same place, but one might be a little bit flatter and take a little bit longer, or in some cases, a lot longer to get to where you want to go versus the other one. You'll get there a lot faster, but there's an exceptional amount of risk undertaken to get there. How about the sweet spot in between it, the blues or the single black diamonds? And that's where we see, that's what we're trying to do for our clients. So it's saying, we're going to get you where you need to go, but we're going to accept a certain amount of risk in order to do so. Not too little, not too much, but we're still going to end up at the same place.
Yeah, great analogy. And I think that's going to resonate with a lot of people. And I love that. But you know what? What's the other thing that happens when we get to blue runs? We have little bumps, don't we?
We do. Yep.
What changes when we get to the black and the double black?
Well, the fear starts to pick up, and we think the bumps are bigger, but they're very manageable in a sense. And bumps are always going to be an inevitability of investing or skiing or anything else. It is all how you manage it and prepare yourself for it that's going to ultimately lead to your success.
Yeah, I don't know anybody that doesn't do, when they do ski down a black run, let's say, they challenge themselves. They've had to go over the bumps. But there's no question that person has become a better skier by going down that run, haven't they?
Exactly.
Which means they've had success.
Yes.
So as we go through markets that have bumps, right? If I'm relaying it to skiing, right? And we go down those steeper, harder hills, which for us are more aggressive portfolios, there is reward at the end by simply getting down the hill.
That's exactly it. Once you've gone through that experience, you're better prepared for the next experience. You say, well, that one's so bad. And now I know what that feels. And I know what the recovery is like at the end of it, or I know what the feeling is like through it. And you become ultimately a better investor for it.
Yeah, it was really interesting today. I had a magnificent fall on one of those bumps in one of those double black runs. I came out of both skis and landed promptly on my face. I came up smiling and laughing because I was okay, which is no different than what happens in a market downturn. Not that we're laughing, I can tell you, but we realized we're okay. And all I did was got up and put my skis on, and I skied down the run, and I can tell you I'm a better skier for it.
I would say it leads to this. Even the most experienced investor is going to run into volatility, and as long as they can accept it, be prepared for it, they're going to end up with a better result.
Yeah, thank you. But again, how was your day? You hit a couple of little roller coasters. Is that can I call them that?
I think that's fair to say. I think they were roller coasters. Even on the greens, it was a roller coaster, not on the black. But, at the end, if you can pick yourself up and move forward, keep moving forward, then you're better off for it.
Yeah, no, maybe. Is it possible that maybe you didn't have a really good guide to help you through there? Which in our world, if we're talking about investing, would be your advisor to help get you through. Is that?
I think that's fair. A heads up to some of those bumps would have made me a little bit better prepared for that.
Yeah.
And maybe not resulted in me getting a lot of snow.
And let me ask you this. Is it possible, like an investor, you maybe came in a little too hot? You came in a little too aggressive for what the terrain could handle or your legs could handle?
I would say definitely. That is always the case.
How would you relate that to an investor?
Well, same thing. If you're not prepared, if you're not aware of the risks that you're taking on, then you could be surprised, and it could be a negative surprise. And that's the whole thing. We think investing is easy, like we think skiing is easy. I'm just going to the top and coming down. But it's experience, it's preparedness, It's understanding, navigating the path in front of you that is ultimately going to make you successful. And if you're just plowing straight on through, you're going to hit those bumps and end up face first in this.
Wow. Yeah, great analogy. Can we get a little detail? Do you mind? We're talking a lot about markets. And again, we've talked an awful lot about what's happening geopolitically. The one thing about we have to remember, capitalism and democracy is they're never static. The day they're static is the day that we're not growing. And democracy can be ugly. We've talked about that a lot, and the history tells us this, right? The path to finding the right answer, it's not always smooth. And we're seeing that around the world today. But yet at the same time, and this causes confusion for our clients, that how is it possible that we could be having these extraordinary, non-economic events, geopolitical events that are highly emotional, including elections, and yet the markets are doing well.
Right. So it comes down to the difference between what drives companies, which is the profit motive, and trying to drive earnings growth positive year after year after year, sales, increase earnings, and so on, versus what drives politics, which is political ideology. And those two things don't always intersect. So companies will often do what's best for the company to grow, regardless of the environment. They will find a way through the regulatory environment, through the political environment, to continue to grow earnings. Good companies do this. Whereas politics tends to be what dominates the headlines. And it's what we think about every single day because it's in front of us every day. And so immediately we turn that into, well, this must mean something for the markets.
Right.
In reality, it often does not.
Yeah,
What drives the markets are the ability of companies to continue to grow their profits over time, regardless of the political environment.
And that is the key strategy and why we need to use professional investment managers, right? We have to take the emotion out because we have to make sure that is a disconnect that people understand. But the emotion will always prevail. That's where mistakes happen. That's when you hit the moguls and you explode.
Exactly.
Right. So we have to take that in. But there's been some significant changes to the iProtocol program that you've been running, enhancements that continue to add value for our clients for the sole purpose of enhancing growth, but more importantly, protecting the downside, right? So making those moguls smaller.
Exactly. Yeah, we know that. Yeah, I love that. So we see the hill in front of us. We say, how can we make this an easier ride? So when you're looking at your line down the hill, it's like, well, I can go a little bit left here, a little bit right here. That's better snow on this side. Same thing with the portfolios. We can add a little bit of gold that smooths out the volatility, add a little bit more defense in the portfolio, take profits where great profits have been had to put ourselves in a better position for the environment that we see in front of us, that line in front of us.
So tell me about the positioning of the portfolios here.
We are a little bit more conservative. We have added a little bit more to fixed income because we do see an attractive bond environment that's paying us in the mid-single digits. That is equivalent to what we see in the equity markets, but much less volatility. Other areas we've added to gold in the portfolios that it's mentioned. We've taken profits within U.S. equities that we see as a great area to take profits in. And all of this is to, again, put ourselves in a better position for the return potential that we see over the next 12 months. It's maximizing the upside while also minimizing the downside.
So let's put you on the hot seat, all right? Because it's cold out. So you'd be happy for that. So we're looking 12 months out. We're sitting here now at the beginning of January 2025. You position the portfolios more or less, not that they'll be stationary through the year, but you've really set a position, right? Tell me about the areas where you believe we'll see the best growth coming from in the portfolios this year.
Okay, so we look forward. If this is the end of 2025, we're going to sit back and say, look, a lot of the political talk was just political talk. It really didn't have as much influence as we thought. And yet the surprises for the market was that the Canadian stock market did quite well, levered to higher interest rates, levered to higher oil prices and higher copper prices. And the U.S. equity market, while did okay, perhaps didn't do as well as some of the other areas around the world. Overall, we still see a positive return for markets in that upper single-digit range, maybe low teens. There was perhaps a little bit more volatility than what we saw in 2024. But we were prepared for it and took advantage of it through the heads.
Philip, I'm going to be chatting to you all the way through the year. Maybe we'll replay this in December. Right. I look forward to it. I know you do. Philip, I want to thank you so much again, not just for the time that we got to spend together this weekend, for the time for doing this on your holiday, but look where we are. as I bring the camera down. What a majestic place that we get to come and visit together.
Well, absolutely beautiful. And thank you for having me, Rod. We great appreciate the opportunity to not only talk to you, but ski with you on the hills.
Appreciate that, Phil. Hey, the one thing I should add quickly is that the iProfile program that Philip is the primary manager on, is a top performing portfolio. I needed to congratulate you on the results that you achieved through the last year. I mean, they are in the top quartile right across the board. There is actually no other that I know managed portfolio like that has performed that you have. And it's because of you and the wonderful team that you have. And speaking on behalf of our clients for their success, thank you.
Thank you, Russ.